This is the first chapter for CMA, and the topic for discussion today is budgeting concepts and forecasting techniques. We will cover the both part of the units. First is based on the budget. We will discuss what is a budget, what are the types of budgets, and how it helps organization in their day-to-day operations. What are the considerations we have to keep in mind? What is a successful budget, and what is the characteristics of how to make a master budget, and what are the characteristics of the budgeting? This is all we are going to discuss today. And the other portion is based on forecasting techniques, which includes the correlation, statistical evaluations like time series analysis, sensitivity analysis, and we will surely calculate the expected value, mean, median, mode in the other portion of this lecture. So focusing ourselves on budgeting, how we define the budget, this is a very important question. Budget is a plan which is maybe short term, medium term and long term, which helps management to control, organize, motivate, evaluate or implement some strategy or some overall objectives which is matchable with the company's operationability. Now, how the budget is going to help organizations, this is some theoretical discussions we have to do. If you see organization is a group of people, they are commonly contributed towards the achievement of the overall organizational objectives. Now, if you see a business operation, it has several sub-functions and operations inside, which includes marketing, finance, production, which includes the R&D, research and development, which has risk management, which has a lot of other departments which contributes towards the overall organizational performance. Now, for each department, we have to set a separate budget plan. So no matters you are from marketing, you are from production, you are from sales, you have to develop the marketing, you have to develop the budgets. So budget is considered as a core element of an organization, and that's why if nowadays if you see the newspaper and all the jobs available in the market is primarily focusing of the persons who know how to make the budgets, they are familiar with the types of budgets and forecasting techniques, cash budgeting, sales budget, production budget, master plans. This is feasibility studies. This is all based on the budgeting concepts which we are going to discuss today. So this is something very practical and very important lecture of the day. Budgets can be for short term, which is you can say less than 1 year, then it will be a medium term, and it can be a longer term period, depends upon the type of organization and the nature of the product itself. Budgets help organization to achieve its objectives. Then what is the role of the budget in the achievement of the overall organizational objective? This is very vital, and budgets will direct you towards your organizational objectives. There are so many factors when you make budget. It's just not a simple calculation like make an income statement or balance sheet or some cash flows. It's like a critical understanding to the external market and to the internal market. You should know the internal strength of your company, what are the quality of the human resource that have, what is the business operations, what are your financial and non-financial resources. Same way, you have to keep in mind what is the overall economic structure of the region that you are operating, what is the inflation level, how the market is changing, how the stock exchange is behaving, what is the next plan for the government, and how the business community is looking towards the economic condition. This is a very important consideration for the budgets. That's why you have to keep in consideration your past performance, which is surely available in terms of your audited accounts. And the other thing that is available with you is the secondary sources, which includes the press, media, and generally available information with you. Now, stepping ahead to understand how budget could could convert the organization into a successful venture, we should know that what is the characteristic of a successful budget. A budget must be realistic. It should be smart, like specific, measurable, achievable, and your target that you're going to set is highly practical to achieve. You know the market conditions, what is the sales forecast, what is the demand and supply forces of the economy, and what is your strength. This is all you have to keep in consideration once you will go for making a budget. The more realistic budget you should have, and now it's a concept that is leading towards multiple budgets, and you are putting your investment evaluation techniques to make it more successful in terms of budgeting. It should be timely, it should be relevant, and it should be understandable for most of the people. Then there are certain types of budgets which are very important to consider. Is sales budget. This is very important to understand how the sales department is targeting the sales for this year, this quarter, this month, and based on this sales forecast we are going to develop our production budgets. And in production budgets we have to take care of your raw material, your direct labor, your overheads, and based on your manufacturing budgeting, your work in progress, your finished products, and all sort of budgeting, you have to go for it. Somehow, if you see that there are two broad categories for the budgeting. One is the performance-based budgeting. One is financial budgets. Based on your performance, and you know your organizational structure, you know your organizational department, your flow of whatever internal structuring you have, your performance budgeting will be based on that one, which will surely take your sales budget, production budgets, manufacturing budgets will be the part of this one. And then you have a financial budget loops, the reports that is based on your cash budget, your pro forma income statements, your balance sheet, and so many things you can develop for yourself for making things effective for your use. Now, budget will facilitate obviously the organizations in their day-to-day operations, and you have to see that what is the controllability factor in the budgeting. For this you define some standards. These standards again should be realistic, it should be achievable, and you make a standard, and then you compare it after some interval. It may be 1 month, it may be a quarter, it may be a 6 months with this, and you get the variance analysis, which will tell you, or which will tell the management to which area they have to focus on. And somehow variance analysis is a key concept in terms of today real world market, and those who are able to identify the variances, they are able to define the real standards, and they are able to compare the actual versus forecasted. These are considered vital employees and human resource for the organizations. Budget could be short term, it may be long term, as I discussed before, and it can be strategic based on the longer term vision of the management, how they want to place themselves, whether they want to grow, they want to build some other branches, or they want to place themselves as a quality supplier. This is all depend upon the management policy, how you want to position yourself. And surely you have strategic budget, you have operational budgets, and a lot of types of budgeting is still there. How to develop the budgets, this is another consideration. You can see that budget can come from top to management. It's like authority as a policy that you have to follow. This is one old approach, but now organizations are using the concept of continuous improvement, and then they are focusing themselves on certain type of participative and decision-making techniques which requires the input of the related people and their focus towards the business operations, which make organization helps to develop a healthy budget for the organization.